Although users support CZ despite FUD, Binance's failure will cripple the cryptocurrency industry. Attention is shifting to a potential collapse after Binance received numerous unfavorable headlines in recent days. Binance launched the Industry Recovery Initiative in an effort to position itself as a lender of last resort following the demise of FTX. The native token of FTX is compared by detractors to BNB. There are, however, notable variances. There is no investment advice provided in any of the videos on this channel. They are only there for educational purposes. Claudio does not make recommendations on crypto knowledge. It was looking for advice on investment should consult a qualified professional. Investors' choices are their own and Claudio is not responsible for them. Traders shouldn't rely on his advice. The exchange is now dealing with a number of problems, including a potential money laundering probe and a sharp increase in user withdrawals since the weekend. Binance is riding a wave of FUD, fear, uncertainty, doubt. The biggest cryptocurrency exchange in the world has started to scare the industry due to rumors of poor finances. Concern has also been raised over CZ's personal conduct. CZ referred to their most recent proof of reserves report as audited proof of reserves in a tweet on December 7. Despite the fact that the report was neither transparent nor a true audit, he also claimed that this amounted to transparency. Concerns have only grown in response to reports of an increase in user withdrawals and a possible probe for money laundering. Not just traders and Binance users are concerned about the collapse of the exchange. With an exchange volume of $7.7 trillion in 2021 and $15 billion in transaction activity during the previous day, the business is unquestionably the biggest exchange in the sector. Though there are no warning signals that the corporation is about to fail, discussion is shifting to what would happen if it did. And it doesn't appear well. Some even speculate about a potential FTX-style bank run for Binance. The market's anxiety, uncertainty, and doubt are, however, the main topics of conversation. The global banking system nearly collapsed in 2008 as a result of the failure of some of the biggest financial institutions in the world. To prevent a domino effect that threatened to engulf the entire economy, governments had to intervene to bail them out. The phrase "too big to fail" originated from this alleged necessity. A firm is said to be too big to fail if its demise would have a catastrophic effect on the economy. This is so that any attempt to salvage the company would be less detrimental than the harm caused by allowing it to fail, according to the government or the surrounding industry. In other words, if a corporation declares bankruptcy and liquidates its assets, the proceeds won't be sufficient to pay off its debts. For instance, if this business were an investment bank, its clients would almost likely be unable to obtain their money back from it. This might trigger a chain reaction that would force other banks out of business and trigger a severe economic crisis. Any collapse in the case of Binance would endanger more than just user money. But any implosion would undermine trust in the industry as a whole due to its size and prominent location. Institutional investors would shift their money into more established and secure industries, and many ordinary investors would probably completely abandon cryptocurrency. Binance is not a bank, despite behaving as if it were. The first thing to note is that controlled exchanges like Binance are not banks. Crypto exchanges are not as integrated into the larger economy as traditional financial institutions are. This poses a lower systemic risk to the entire financial system. The rest of the industry will be impacted by their failure, though, as they retain billions in user monies. Given that CZ briefly contemplated saving the floundering FTX last month, it would appear that they both appreciate this. After that, Binance suggested creating an Industry Recovery Fund. Applications for the Industry Recovery Initiative, IRI, as it is officially known, are now being accepted from businesses that are struggling for no fault of their own. This puts Binance in the unsettling position of serving as a type of central bank or lender of last resort. An industry with built-in financial safeguards would be advantageous to everyone, according to a charitable interpretation. Binance is merely attempting to stabilize the sector in which it has a major stake. Good for them, I suppose. Of course, a less favorable viewpoint is that Binance looks more stable as a result of this strategy. Why, after all, would a business with weak finances attempt such a risky maneuver? In either case, this dramatically worsens any Binance crash. Who would save Binance from failure if it happened?